Hi everyone, this is Rob Roy and welcome to the Elliott Wave Options U.S. Market Update. As you can see from the background, I'm not in the Dragon capsule and I'm not in the cabin either. I'm actually out of town to play in a big golf tournament this weekend that I play in every year. But even when I'm out of town, I like to take a moment to talk the markets with you. Before we get to the charts, please don't forget to hit that like button, or better yet, hit subscribe. You'll be notified immediately when one of these videos is posted. Thanks, we really appreciate it. All right, so taking a look at the market, you can see there we got just so close to closing this first initial gap to the downside. You can see back there on the 9th of June, the low was 401.44. And the high today was 400.18. So literally a point away from closing that gap. So we usually actually get the gap closed, so you could say, well, that's close enough, and sometimes it does stop a whisker away. A little bit of reversal finish to the downside, so when you see that, you want to say, oh, did volume come in? Did we get a higher volume on the reversal? Well, no, not really. So you can see that still below average volume, so you don't really worry so much about the fact that we had the reversal. In fact, if we take this line off here and put the 10-day moving average on, you'll be able to see that really what happened was at that high of the day, we started to gain some separation from the 10-day moving average, so we were just technically a little bit overbought. So the market reversed, headed back down, and look where we are, dead on top of the 50-day moving average. So that's going to be pretty interesting going into such a busy week that we have upcoming that I detailed in the intro. So now we take a look at the VIX. Let's see, did the VIX reverse on that and move back to the upside? And no. In fact, Tuesday night in our TradeFinder, we were talking about the possibility of the VIX dropping below 25. Well, I'm talking about TradeFinder. We do it every Tuesday night at 9 p.m. Eastern Time. We talk the markets, we look for trade ideas, and we have a live Q&A. It's a lot of fun. If you haven't signed up for it, go ahead and do so. You can sign up underneath this video or go to our website at ewotrader.com. It's a great time. So talking about the VIX, we did break below 25 here, and even with the fact that we had a little bit of a reversal with the market moving from the upside to the downside, we kind of crept lower on the low of the day and then just closed ever so slightly lower than Thursday's trade, but no real move back to the upside in the VIX either. So no big volume on the reversal, no big move in volatility on the reversal. Again, it was just a little bit of an overbought scenario getting corrected as the markets move lower moving into the weekend. Got a question for you. What do you think comes next in the VIX? Post a comment underneath the video. I'd like to hear whether you think we hit 35 again or break 20 before. So what's the next move in the VIX? 20 or 35? Again, I'd love to hear your comments. So if we take a look at the 10-year, that was what was really interesting on the day to me. You can see that this big move lower, is that indicating more economic weakness? Certainly wasn't a ton of money flooding out of the equities market moving into bonds today. So just perhaps a little move on the economic weakness, as I mentioned. Now you can see this big outside day here. We talked about that last night in our insiders meeting, which is what we have for our alert subscribers only every Thursday, where we do an extended Q&A, talk to markets there as well, in addition to all of the alerts that we have sent out for our alert subscribers. But when you have an outside day like that, where the high of the day exceeded the high of the previous day, the low of the day exceeded the low of the previous day as well, usually something happens the next day. So I said last night something's probably going to happen with rates today, and it did. It's a pretty decent move to the downside there in rates. Really interesting considering the Federal Reserve is embarking on rate hike campaign. Now there's been some speculation. Not everybody agrees with this. In fact, not a lot of people agree with this, but some are saying that the Fed's going to go 75 basis points this week and then pause. So we know the market looks ahead, and we know that likely 75 basis points is already baked in. There was slight chatter earlier, as I talked about last weekend, for a potential 100 basis point rate hike. Doesn't look like that's going to happen, but the 75 is probably already priced into the market. So are we looking down the road at the fact that the economy slows so much that the Fed has to pause on the rate hikes, and 6 to 9 months down is looking at cutting rates? Interesting theory to talk about there as far as rates. Looking at the dollar consolidating here a bit. So we had talked about the fact that it had gone too vertical, even though I like a strong dollar, not this strong, and we had moved vertically up. And what goes vertically up usually comes vertically back down. And that's what happened. So we corrected the vertical move in the dollar, and now we're just consolidating that move in this area. That's a little more stable for international companies with the exchange rate, etc. We don't want the dollar to be in a runaway scenario, but we don't want the dollar tanking either, because then that shows extreme economic weakness. So we still have this conversation going on how deep is this recession going to be. I think probably everybody expects now that GDP report will show an official recession, but is it going to last long? Is it going to be a deep one? Is it going to be shallow? Man, you can comment on that too if you'd like. How serious is this recession going to be? Looking at the Dow, you can see the Dow moved back up above 320 but couldn't hold it. But at least it got back above that level there, which was a major point that it needed to get to. It didn't get quite as close to filling this gap from the 9th, though, as the SPY did. We put the Elliott wave chart back on there, just like the SPY. Wondering if that wave 5 is over, hitting that 61.8% fib level, moving back to the upside. Also, just a bit overbought on the high, so the Dow and the S&P are moving very much in lockstep right now. Looking at the Qs, and the Qs reverse bit. Now they didn't have another gap to fill, but they were able to get above 300 and hold it. We did reverse on the Qs, but we held above 300, which is key. And we've been talking about this in the last several recordings that I've been doing. Remember that the Qs have been way underperforming. They had 118% extension on the wave 5, where the SPY and the Dow only went 61.8. So the most oversold market is the one that's likely to bounce the most coming up. So can the Qs lead us out of this? We're going to find out a lot this week. We're nearing all these resistance areas, and then we have such a big week coming up with economic news and earnings that I detailed also in the intro. So we're not going to have to, by the time I talk to you next weekend, we're going to have a lot to talk about, I think, with how the market reacts to all that different news. Looking at the Russell, got black below 180, but 180 doesn't really mean that much on the Russell, right? The two key levels here that we've been looking at are 170 and 190. We're well above 170. Can we get back to 190? Can we get back above 190 would be key. The Russell didn't fall as much as the SPY or the diamonds, with 38.2% fib level extension on the wave 5 rather than the 61.8. So right in the middle of that trading range on the Russell. So not looking too bad there. And if you look at the 10-day moving average, also just a tiny bit overbought on the high of the day. So you're seeing that there's no harm, no foul today on the markets. Now looking at Bitcoin, boy, it tried to get back above 24,000. We've been talking about this, that with this long consolidation here at 20,000, where was the next step going to be? Was it going to be another step down? Was it going to be step back to the upside? And if we could get up here and somehow get above 24,000, that was where the next resistance was. Could we make a run at 28? Well, at least for now, Bitcoin got turned back at the 24,000 level, but it could have just bumped its head. You can see there was a doji there. I know it trades 24/7. I understand that. So we've been through that numerous times before. We have the end of day print here, just like we do in the futures, etc. And you can see we closed just above the 10-day moving average. So note that as we were trying to break above 24,000, we were getting some separation from the 10-day moving average there as well. Maybe just a tiny bit overbought there, a little too much to make a run above 24,000, in addition to the 50-day moving averages right there. So that was acting as resistance as well. So it'll be interesting next week to see, can Bitcoin just consolidate here right under this 24,000 level and then make a run at 28,000. I thought I'd show you silver. Since the dollar's been consolidating a bit, could we get some sort of a bounce in the metals? Well, not out of gold and silver. SLV is holding above 17, which that's a key level to hold, but no real interest, even with the dollar weakening and consolidating, just going sideways here on the SLV. Now, if we can go sideways for a while here and build a good level of support to blast off from, that launch pad effect that I talk about, when something goes really dead sideways, often you get a blast off type move. We're not there yet. We've got some more consolidation to go through, but I guess you could look at least as a positive that we're holding above 17. But in my opinion, it's disappointing to not get more of a bounce out of gold and silver with the dollar showing a bit of weakness. I did want to show you Tesla, just to remind you, we had this triangle pattern. We talk about triangles all the time. We have an entire portfolio at Elliott Wave Options devoted to trading triangles and their breakouts. And look at this doji right here in the point of this triangle. And we said this would have been an expensive one, obviously, on Tesla. And their earnings report was kind of disappointing to a lot of people. But I guess the forgiveness is the demand's still there for the cars. They just can't get the parts, so they can't make as many cars. And that was a negative. But on the earnings report, we did get a significant break to the upside out of that triangle. So is that giving us some sort of a view into the future that slightly bad news was forgiven? At least in the world of Tesla, it was. And you would think that maybe there would be a little more wait and see. Are they going to make Elon Musk buy Twitter? How's that court case going to come out? And we'll see how that plays out as well in the coming weeks. Looking at the EWA for Australia, we're right here, bumped its head against 22. That's the level it's got to get above. Little bit of an ascending triangle here underway with this consolidation right there at 22, bumping its head at resistance there, and then the set of higher lows. If we can break above that 22 level, then we've got a shot to get to 23. A little bit of resistance there, but mainly the resistance is up at 24. So I think if we can put some breakout here, get a little breakout from this triangle and move up above 22, you got a good shot of running to 24 there in the EWA. Looking at Canada, the EWC, pretty nice bounce off of the lows. Good to see it get back above 33. That was a key level. It needed to get there. It was trying to really significantly break down. You can see that wave 5 went 112%. That 161.8% fib extension was in danger there, but a big reversal back to the upside. And you can see we're above the 10-day moving average here. Little bit of resistance there at 34. Stop the move, but getting above 33 and holding it was key. Now we'll see if we can consolidate here a little bit and maybe make a run up on the EWC and try to fill some of these gaps that have almost been filled, as you know, on the SPY and the Dow. India, pretty good chart here. We've been talking about this for the last week or so. That really nice bounce off of this level here at 39, right at a 61.8% fib extension there. Had a 38.2 fib corrective move here in the wave 4, just Elliott wave Fibonacci stuff all over the INDA now, like it is the EWG, which we'll get to in a second. But you can see right here, we are right at another major point, 41. We did break above it and close above it in Thursday's trade and closed dead on it with a doji here Friday. So something's going to happen here likely on Monday. Are we going to turn and head higher? We look at the 10-day moving average. Again, we were just a little too much overbought here, I think, to try to break above that 41 level on Friday. Maybe we consolidate here for a couple days and then take a shot at it. But pretty good looking chart there on the INDA, at least for now. And then we have Germany, the EWG, and sitting here against resistance there at 23. So we couldn't break back above it. That's acting as resistance. Can we make some sort of a run? The problem that the EWG has is you get above 23 and then boom, you got more resistance right there at 24. Then are we going to set the wave 4? Are we going to label that? We've got a ways to go before we can get up and get these gaps that occurred back on the 9th of June, etc. Just a lot of work to do for any sort of a meaningful bounce out of the EWG. It's got to get above 23 first, and it's in danger of falling from that level and heading down towards that new wave 5 level low. So I figured you guys probably would want to take a look at the chart of oil. So let's just bring that one up real quick before we wrap things up. And pretty good consolidation here right around 75. So we had this breakout, another triangle breakout. So you see why we have an entire portfolio devoted to those. Nice breakout up to that 61%. You know all this, right at that strong fib level. those triangle breakouts get retraced. It did, and coming back down there, now we're in, all right, wait and see mode. We came back to the previous 4. That's also supposed to happen in Elliott wave Fibonacci land. So you hit the wave 5 right at 61%. You come back down to the previous 4. And now we're just consolidating. So we're waiting for oil to tell us where's the next big impulse move going to be. For now, it's just a consolidation, and at least it feels slightly better at the gas pump. Well, I hope you all have a great weekend. Look forward to talking to you again next week. Take care, everybody. If you like these recordings, I'd like to invite you to join our new TradeFinder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.